Imagine Elon Musk sitting across from an Indian stockbroker turned billionaire and basically telling Indian entrepreneurs, yeah, most of you should not be starting companies. Brutal? Absolutely. But also probably the best free business advice India's startup scene is going to get this decade. Welcome back to the comment section with Thomas Paul, where we take billionaires' conversations, strip out the hero worship, and ask the only question that matters. Okay, but what does this mean for your money? Today we're breaking down Elon Musk's conversation with Nikhil Kamath, yes, the Zarada guy, and turning it into something very specific, a reality check for Indian founders and investors. If you're in India, thinking about quitting your job to build the next Tesla of insert anything, you're going to want to hear this before you send that resignation email. And here's the twist. Elon's advice for Indian entrepreneurs sounds inspiring on the surface, but if you actually listen carefully, it's also a giant red flag for investors about which ideas to avoid, what's overhyped, and where the real alpha might be hiding. Let's get into it. So, quick context. This whole conversation between Elon Musk and Nikhil Kamath is supposedly about helping wannabe entrepreneurs in India. That's literally how Nikhil frames the audience. People in India who want to start up, take risks, and build something big. Which is adorable. Until Elon starts talking. Because what you see in that interview is not motivational guru Elon. It's cold, calculating engineer Elon, who has built multiple companies and almost gone bankrupt doing it. And that version of Elon is not trying to inspire you. He's trying to warn you. First, think about the setup. Nikhil is sitting there, fanboying a bit, talking about how Elon has done it repeatedly across different domains. Cars, rockets, payments, AI, social media, satellites, energy. The vibe is clearly, teach the Indian kids how to become you. And Elon, in his usual laid-back but savage way, basically pushes back on the idea that this is something most people should even try. Because here's what doesn't get said in motivational LinkedIn posts. Elon's entire career is essentially a sequence of rolling all his chips into each new insane idea, sleeping in factories, almost losing everything multiple times, and operating with stress levels that would send most of us straight to a cardiologist. So when Indian founders hear, Elon did it in multiple domains, you can too. What Elon is actually saying between the lines is, you probably shouldn't, and if you still want to, you better be slightly unhinged. And here's where things get interesting. Let's break down the key takeaways from that conversation and translate them into blunt, Indian market-friendly language. What it means for people starting up, and what it means for people putting money into those startups. The first big piece of advice Elon gives, directly or indirectly, is that entrepreneurship is not this glamorous path where you raise a seed round, wear merch hoodies, and drink cold brew in WeWork. For him, building companies is almost like a compulsion. It's not a life choice. It's a bug. His default mental model is, find a massive problem that clearly sucks for humanity. Ask, if this doesn't get fixed, what happens? Then ask the stupidly hard question, am I willing to get wrecked trying to fix it? Notice what's missing. There is zero mention of, I wanted to be my own boss, or I wanted a better work-life balance. If anything, his whole life has been an argument against both of those. If you're watching this in India, where entrepreneurship has become this aspirational lifestyle, founder photo shoots, personal brands on Instagram, reels about my 5 a.m. routine as a CEO, Elon's approach is basically a slap. In that Kamath conversation, you see how practical he is. Coffee, small talk, whatever. But underneath that, he thinks like a builder, not like a motivational speaker. He knows timelines. He knows engineering constraints. He knows trade-offs. To Elon, a startup is not a vibe. It's an engineering project with a 90% chance of failure and a 10% chance of ruining your social life. So if you're an Indian engineer or MBA thinking, I should start a company because that's what ambitious people do, Elon's brutal advice boiled down would be, unless you feel an almost irrational need to solve a specific problem, don't. And it gets even wilder when we combine that with what Indian founders are actually building. Right now, a lot of Indian startups are centered around convenience, last-mile delivery, grocery apps, 10-minute snacks, beauty products, fintech wrappers around existing banks. Useful? Sure. World-changing? Not really. Meanwhile, Elon is out here picking fights with physics, reusable rockets, electric cars when everyone laughed, AI that can write code, trying to colonize Mars because Earth might not be enough. So if you apply his standard to the Indian startup scene, most pitches would sound like, yeah, we're not trying to solve a massive existential problem. We're trying to make sure you get your chips in 6 minutes instead of 16. From Elon's lens, that's probably not worth burning your entire life for. But wait, it gets even more interesting when you consider this from the investor's point of view. Because if Elon's playbook is 1. Find enormous, obvious problems. 2. Take stupidly big risks. 3. Be okay with almost dying repeatedly. Then what does it mean for the Indian capital markets, especially for investors looking for the next Tesla in India? Let's go there. Elon's track record shows one thing very clearly. Compounding in tech comes from betting on insanely hard problems, not from slightly better user interfaces for things that already work. When Nikhil Kamath tries to extract lessons for Indian entrepreneurs, he's basically representing the standard Indian path. Make money in a relatively rational, risk-controlled way, like brokerage, finance, and then maybe back some founders who are building cool stuff. Elon comes from the completely opposite direction. Take existential risks up front, then hope the world eventually prices in the insanity correctly. If you're an Indian investor listening to this conversation, you should be hearing something very specific. Stop confusing popular with inevitable. The businesses that make you money in a bull market, consumer apps, quick commerce, trendy fintech, are not the same as the businesses that fundamentally reshape India's economic trajectory. Now let's translate Elon's mentality into an Indian context. He likes companies that are capital-intensive, deep tech or infrastructure-heavy, painfully hard to execute, obvious in hindsight, insane in the beginning. For India, that probably looks like clean energy manufacturing and storage at massive scale, indigenous space tech and satellite infrastructure, artificial intelligence models and chip ecosystems that reduce dependence on imports, high-speed transport, industrial automation, robotics, maybe even biotech at Indian cost structures. Notice how boring these sound compared to new D2C brand or social app for Bharat. This is where investors need to wake up. Elon would probably be more interested in a slightly sleep-deprived founder who's trying to figure out low-cost battery recycling in Gujarat than a very polished founder raising a Series B for a meme-based consumer app. And here's where things get even wilder. If you compare how Elon thinks about risk to how Indian investors think about it, the contrast is hilarious. In India, risky is often, "We're not profitable yet," or "We don't have a clear monetization model." For Elon, risky is more like, "If this fails, I lose everything, and half the world laughs for a decade." He actually normalizes that level of fear. So what can Indian investors take from this? 1. The truly transformative plays in India are going to look deeply uncomfortable. They will not fit neatly into your Excel template. They will have heavy regulatory load, engineering uncertainty, long gestation periods, and probably awful unit economics for years. 2. If you want Elon-like returns, you can't just spray money on clones of US consumer startups with a Hindi UI and call it localization. You need to find the few deranged people in India who are willing to work on, let's be honest, slightly insane problems. Those are the people closest to Elon's wavelength. And 3. Watch where government policy, infrastructure gaps, and scientific capability intersect. That's usually where the next decade's monsters are built. Because here's the kicker. If you're just funding yet another X but for India consumer app, you're probably not backing the next multi-trillion opportunity. You're backing someone's eventual acqui-hire. Now let's zoom back to founders for a second, because this conversation between Elon and Nikhil has a very specific implication if you're in India, sitting in a Tier 2 or Tier 3 city and thinking, should I even try to build something? Elon's core philosophy answers that almost directly, even if he doesn't say it in those exact words. Number 1. You don't need to be in Silicon Valley to start something meaningful. Look at where Nikhil is from. Look at where a lot of Indian fintech and SaaS founders came from, not exactly born with a unicorn pitch deck backgrounds. Elon himself grew up in South Africa, moved around, ended up in the US, but what really mattered was not geography, it was obsession. He read everything, taught himself, surrounded himself with smarter people, and kept attacking harder and harder problems. The same thing is now happening in India. You have access to knowledge, capital, and global tech, sitting anywhere with a half-decent internet connection and a laptop that doesn't burst into flames. But here's the brutal filter Elon would probably apply to Indian founders. Are you solving a problem that even deeply rational people might call too hard? Are you willing to look stupid for years while you work on it? Can you explain it so clearly that a non-technical investor still feels the weight of the problem? If your startup idea is something that sounds great in pitch competitions but doesn't really scare you, it's probably too small. Think about it. Elon never started a kind of okay company. Even his relatively normal one, PayPal, was effectively trying to reinvent money on the internet when people were still scared of putting card details online. So if your big idea is, we're building a curated marketplace for anything, ask yourself, will this matter in 10 years? Or is it just an arbitrage on current inconvenience? Now, does that mean everyone in India should suddenly try to build rockets and EV factories? No. This is where things get nuanced. Elon's path is not a template. It's more like an extreme reference point. What he's really showing, especially in that calm conversation with Nikhil, is founders who actually move the needle usually have a painfully high tolerance for stress, a deep technical or product understanding, and a mission that's not purely about money. If you strip away the aesthetics, that's the real test. Would you still work on this problem if there was no funding hype? Would you still care if no one knew your name? If yes, then Indian or not, funded or not, you're closer to Elon's model than most. Now let's flip back again to the investor's lens, because the whole point of this channel is, how do you turn these big guru conversations into actual signals for your portfolio? Here's what Elon's conversation implies for investors who care about India. First, obsession is a leading indicator. When you listen to Elon speak, even casual questions about coffee and daily routine slide quickly into how much of his mental bandwidth is consumed by building. The man doesn't just run companies, he lives inside them. As an investor, when you meet a founder in India, ask, is this their side hustle or their main identity? Could they walk away from it tomorrow and feel okay? Or does this thing define them? The closer the founder is to, this is my life, the closer you are to the Musk archetype of insane builders. Second, cross-domain comfort matters. Nikhil talks about Elon doing it across multiple domains. That doesn't mean you need founders doing 5 things at once, but it does hint at something important. The best founders can connect dots across fields. So in India, the killer founders in the next decade might be engineers who understand policy, bankers who understand AI, doctors who understand data, operators who understand hardware and software together. If a founder's background looks like a straight, clean line with no weird spikes of curiosity or domain shifts, that's a yellow flag. Elon's career is full of sharp turns because the common thread wasn't industry, it was problem selection. Third, timeline mismatch is real. Elon thinks in 10, 20, 30-year horizons. Indian capital, especially public markets, often thinks in 3 to 5 years max. This means as an Indian investor you need to be honest. Are you playing the Elon game or the quarterly earnings game? If you're in public markets and buying stocks, your Musk-style bets might not look like sexy consumer tech right now. They might look like boring industrials quietly building rail, power, infra, defense, and manufacturing capacity linked to big national priorities. On the private side, early-stage investors need to accept that genuine deep tech or India-scale infra plays will look bad on a spreadsheet for a long time. If you want the upside, you have to sit there while your peers on Twitter brag about quick markups in easier categories. And here's the fun part. By the time the Elon-style companies look safe, the returns are mostly gone. So what should Indian investors watch next, if they're inspired by this conversation but don't want to get scammed by hype? 1. Watch where policy is pointing. India is not going to Mars tomorrow, but it is absolutely serious about energy transition, manufacturing, defense, and digital public infrastructure. That's where the Musk-type founders will eventually drift, towards hard problems that align with national priorities. 2. Watch second-time founders. Nikhil is a great example. Built Zerodha, now exploring more. In India, the founders who have already made money once and now want to swing at harder problems are your best candidates for Musk-style risk-taking. They can afford to think crazier and longer term. 3. Watch young teams that are clearly more obsessed with tech than with fundraising. If their deck is prettier than their prototype, that's not very Elon. If they know exactly how their tech fails, where the physics or math breaks, and what needs to go right, that's much closer. Let's bring this home with something very simple, especially if you're watching this as an aspiring founder in India. If Elon Musk were giving honest advice to Indian entrepreneurs after that conversation with Nikhil Kamath, it would probably sound something like this. Most of you should not start companies. You might be far more valuable and far wealthier by joining a genuinely mission-driven company early and becoming a killer operator. There is zero shame in not being a founder. In fact, if you look at Elon's companies, some of the biggest wealth creation has gone to early employees and executives who didn't have to go through the near-death phases he did. So before you quit your job, ask yourself, do I want to be a founder? Or do I want to work on important problems? Those are not the same thing. If what you really want is impact plus upside plus some level of sanity, your optimal move in India might actually be join a hard-tech, India-scale company early. Take equity seriously. Grow with it. On the other hand, if you're still like, nope, I want to build something from scratch, even if it destroys me, then, congratulations, you might have the exact kind of irrational wiring Elon is talking about. In that case, filter your ideas ruthlessly. Is this a problem that will matter in 20 years? Would you work on this with no tweets, no claps, no startup awards? Is the difficulty of execution the reason you're attracted to it, or the reason you're avoiding it? If you're running toward the difficulty, not away from it, you're closer to the Musk end of the spectrum. And for investors, the summary is even shorter. If you want Elon-level outcomes, stop funding comfort. Start funding discomfort at scale. Look for founders who look a little too obsessed, problems that sound borderline ridiculous today, roadmaps that don't fit neatly into 3-year exit plans. That's where the next decade's compounding hides, especially in India. So, to wrap this up, Elon's conversation with Nikhil Kamath is not just a cute crossover between a US tech god and an Indian fintech king. It's actually a clash of philosophies, rational wealth building versus irrational problem obsession. And the magic for India is going to happen at the intersection of those two. If you're a founder, your job is not to imitate Elon Musk's lifestyle. It's to steal his decision frameworks, pick harder problems, think longer term, be honest about your tolerance for pain. If you're an investor, your job is not to tweet quotes from Elon. It's to adjust your risk appetite in a way that you're actually backing the type of founders he represents, not just the ones who quote him. Now I want to hear from you. If you live in India, do you think Elon's style of insane, world-scale risk-taking even fits the Indian environment? Would you ever bet everything on one crazy idea the way he did? Or is that just billionaire hindsight talking? Drop your honest take in the comments. Founders, investors, employees. I want to see all sides of this. And if you want more breakdowns like this, where we take big-name conversations and translate them into actual strategy for your wallet, hit that subscribe button, tap, like so this reaches more people who need the reality check, and share this with that one friend who keeps saying, "Bro, I'm building a startup," but never says what it is. This is The Comment Section with Thomas Paul. Thanks for watching, and I'll see you in the next one, where we'll probably upset another group of very enthusiastic LinkedIn founders.